Good morning, students. I am Dr.R.VANAMADEVI going to talk about the auditor's duty with regards to depreciation. Depreciation can be defined as a continuing, permanent and gradual decrease in the book value of the assets. What are the causes of depreciation? One is the wear and tear due to use of passage of time, then expiration of legal rights, obsolescence and abnormal factors. Then the objectives of providing depreciation is to know the ascertainment of true profits of the organization. Then I identify the true and financial position of the organization. When we are going to replace of assets, we have to provide depreciation. I am going to talk about what are the factors determine the quantum of depreciation, that is amount of depreciation. It is based on the original cost of the asset, expected and useful life of the asset, estimated residual value of the asset, method of providing depreciation and requirement of statutory laws. There are different methods are available for providing depreciation. The straight line method or fixed percentage on original cost method. Under this method, we have to calculate the depreciation on fixed percentage on the original cost. Second method is a written down value method. There is a percentage on diminishing balance or reducing installment method. Based on the value of the assets at the end of the year, we have to calculate the depreciation on for some percentage. And insurance policy method, we have to take an insurance policy every year. We have to pay premium. That amount is debited to depreciation account. Then sum of the digits method. And another method, revaluation method, deflation method and Meissner method. There are so many methods are available for depreciation. So the main objective, that is the auditor's duty with regard to depreciation, are first one, the auditor duty is to verify the depreciation rate. The auditor should ensure that depreciation has been provided as per the rate prescribed by the Companies Act. Second one, disclosure in financial statement. The auditor should ascertain that adequate depreciation is charged and properly disclosed in the profit and loss account and balance sheet. Third one is the complying with accounting principles. The auditor should ensure that the relevant accounting principles have been followed while providing for depreciation. Depreciation on purchase on sale. When the assets are purchased or sold during the year, the auditor should ensure that depreciation is charged on the pro rata basis, taking into account the data of purchase or sale and the accounting period. The next one, certificate from experts. In case of the depreciation charged is more than the rates prescribed, he should examine whether same and or based on professional and technical advice. Consistency. Where different rates are used for different assets, the same should be consistently applied over the years. Change in method of depreciation. In case of change in the method of accounting for depreciation, it is recalculation from the date on which the assets came into use and deficiency, if any, has been charged to profit and loss account. Then adequacy of capital employed. Auditors should check whether the capital employed in the asset is being kept intact. Revaluation assets. In case the revaluation of assets during the year, he should ensure that the depreciation is charged on the revalued amounts. Procedure of computation. He should ensure that procedure for calculating depreciation complies with the provisions of Companies Act and Income Tax Act.